morning, all. Ira Epstein, and here we are with your morning flash update, and this is for Thursday. We're at the 23rd of March, 2023, 8:15 a.m. Central Time. So we had a big break yesterday after Fed Chair Powell at first said deposits are guaranteed, after he raised interest rates another quarter point, after he said that he doesn't expect interest rates to drop this year, and we may even have to go higher on them. Okay. Then we had that statement that deposits have been safe, they're guaranteed, blah, blah, and then he had to walk that back, which he did. And then Ms. Yellen came in late in the day and said, no, there is no movement underfoot to guarantee all deposits at banks over $250,000 into whatever tier you might think. That sent the markets down. Now what we're getting this morning is what I call the yin-yang impact. We get those reports, as you know, at 1 o'clock first comes out the statement, then at 1:30 comes out the press conference, ends about 2:15. People in Asia are sleeping. People in Europe, it's done already. I mean, think about that. 2:30, 5-hour difference minimum to Europe from Chicago. What are you sitting with and all that? Okay, so you've got people at dinner. Now they come back and everybody looks. This morning, we've got the Swiss National Bank and the Bank of England, both going up by exactly what the market had forecast. Swiss National Bank raised their rates 50 basis points. Bank of England went up by 25. So if you look at the Bank of England, the market at first jumped on the news. Now it's settling back. And what we're getting is there's comments that go with that say if they have to go higher, they will. Now, many analysts think that inflation is peaking right now in the UK, although there was a surprise this week when it jumped, and I think that forced the bank's hand. In the euro, it appears to me that they're going to stay very aggressive. Ms. Lagarde wants to continue raising rates. I bring all this up because it plays a big hand in where we're at right now. Simply put, the Fed chair seems to be alluding to the fact that the banking system is going to have to clamp down. Rates are going higher. The couple of banks that are having problems, this is not systematic through the whole banking system. It's mismanagement at these particular banks, these niche banks that just didn't take care of business one way or the other. I don't think anybody can disagree with that. This wasn't just suddenly these banks got into trouble. You may think that, and they may want you to think that, the banks, but there's not reality to that. They had taken in deposits. They bought certain assets that paid them a low interest rate for a long period of time. As interest rates climbed higher, well, they didn't get the benefit of that. And then as deposits came in, what happens is the face value of those when you went to sell them was down dramatically. They need more capital, and that starts the bank runs. I've given you the simplicity of it, but that's where it's at the end of the day. Will First Republic be saved? I have my doubts. I think it's a dollar stock if it survives. I don't think that there's anything positive there. I think the run will continue. When I look at bonds and notes, I see the rally this morning. Why? Why isn't the market adding premium? Because the market believes we're very, very close, if not there, and have seen the peak in the longer term end. So in the bonds, I think if you poll traders, they don't think we're going back to the peaks that you just recently saw. Now, that could help some things, such as housing. If we can get the front end of the market to start dropping a little bit and not be where it was, maybe that helps with other everyday charges. We'll find out. What wasn't good today was the fact that U.S. jobless claims came in another 1,000 lower. So we can't get over that 200,000 number, down 191. They were looking for an increase of 6,000. The continuing, though, is wobbling. 1 week you get it up, the next week you get it down. The Chicago Federal Reserve National Activity Index, terrible. For Chicago, we dropped to negative 19. The prior was plus 23. I don't think the market was looking for that. I didn't see yet the fourth quarter account data. It's out. I just didn't pick up on it. The Swiss National Bank did raise their rates. By the way, the Philippine Central Bank went up by 25 basis points, and the Bank of England. So around the world, what we are getting are people are stepping in at this point in time. They are raising rates, and many of the economies of the world are saying if we raise them enough, what happens is lending will stop. What happens is the banks pull in, they go, blah, blah, can you afford this loan? And that's basically what tightening money does. And you slow the economies down. Yesterday, Fed Chair Powell said he expects that by these hikes, actually the bank's tightening is the equivalent of another rate hike by itself. Well, we're about to find out. Gold likes the idea that the dollar will not get a benefit off of higher hikes lasting, and you could see the dollar down, metal markets are to the upside. This is the thinking that is going on. And am I as eloquent maybe as others could say it? Maybe not, but I think I'm right there. I want to remind you our guide to technical indicators, volumes 1 and 2. Please take advantage of them, whether it be price charts, candlesticks, area charts, you've got it. Then trend lines, how do you drive them? Where do you go? Moving averages, you really know how to use them. The different types that there are. Slow stochastics, RSI, MACD. What do the spreads tell you? Then you get to the timing of Elliott Wave and Gann and so on. That's covered, all in good detail, showing you an awful lot as to what's going on there. And of course, money management. If you can't manage your money, I don't care what you think you're doing, you're going to have a losing trade here or there and you can break your account. So where do you put those in? Where you're wrong? How do you get all this? It's really simple. Just go to our website, iraepstein.com, under free offers, or move your cursor up here at any time. Give a click. They'll be yours, and we have many other free offers up there for you as well. You can get access to my research as a free offer. You can get the Linn Research, our charting software. There's many other things, price counts, chart of the day, many things. Ask our brokers and or just sign up for it. I'm Ira Epstein. I'll see you at the end of the day with the market wrap-up. Trade well.